Hello everybody, welcome to OT Academy's session on, well, our webinar series, really not a session. Today we're going to talk about common stock market scams, and I thought it was very appropriate to do this topic because over the past few months we received a lot of different emails and questions about different industry scams. What are some of the things to look for? So why not enlighten the viewers and our listeners by showing you exactly what's out there and some of the things that we can pay attention to and maybe save ourselves a little bit of money and not throw it away into stupid things that are just basically a scam. So let's start off with an overall disclaimer. This is just for informational purposes only. Hope that you guys find some great information here and hopefully it will help you, again, avoid some of the pitfalls and traps that these guys have set for us. So let's start things off with a kind of a great quote. It's one of my favorites, and it's attributed to P.T. Barnum, entertainer many years ago. He's actually got a nice movie out right now that deals with his rise to fame and how he started the whole circus industry. And he was quoted as saying, "There's a sucker born every minute." And I think it's nice to put it in perspective when we look at the way that he was using it. It was about having an audience come in and being captivated and misled maybe by some of the theatrics that were going on. For example, the tall man in P.T. Barnum's circus was wearing platform shoes and stilts. The bearded lady had a little extra hair put on her face, but still created the illusion of these characters out there. And he said a sucker is born every minute. Well, in the financial world, it's far greater than that. I would say that there's suckers born every second. And that's because there's money involved. P.T. Barnum was in a different situation. He was an entertainer. Well, financial markets are deal with people trying to get rich. And the average person is going to look at some claims out there and just fall for it, hook, line, and sinker. So we'll walk through some basic things that we need to understand as we approach this topic of scams in the marketplace. The first one really is, what is the definition of a scam? Well, there are a couple different ones, but essentially you're looking at a dishonest scheme, a system, or a structure of doing business that is dishonest, and in some cases, a fraud. So in order to put it in perspective, and a lot of this has to deal with rates of return. I think a lot of people get misled and are confused by different rates of return. We'll take a look back throughout the course of history and see what is actually an acceptable rate of return. What should we be accepting? So let's ask you the question in the audience, and you guys feel free to type in the chat there. We'll be watching it. What is a realistic rate of return, right? What would you expect if you invested in these financial markets to get without taking too much risk and not taking any? You can't put yourself in the position where you're taking no risk at all. That's staying out of the markets. But if you did enter the markets, what's an acceptable level of risk? Well, an average annual market return since 1928, and here we have the Dow Jones Industrial Average going all the way back to that time. You can see it's been pretty incredible since 1985. Well, an average annual market rate of return, any guesses? Bueller? We'll round it up, and there it is at 10%. Now, most will say it's between 8 and 10. A lot of the statistics I've found say 10%. So that is an average annual market return. That does not mean that if you just put your money in the market, you're going to get 10% that year. That's not the way that it works. But over the course of time, if you've been invested for the long haul, you get about an average there. All right, so let's start off with some of our market scams. We'll start off with corporate fraud. I'm leaving a big blank space here because I want you guys to think deep about some companies out there that have been caught for corporate fraud. I'll let you give a quick little thought there, and we'll bring on the biggest one, Enron. Enron is probably the biggest culprit out there as far as an accounting fraud. Now, the difficult part with corporate fraud, and we'll break it into two kind of categories here. The first one is the hardest, which is their accounting, right? Most of us, and I'm throwing myself in this category, are not involved with the financial statements. We're not there with the CFO, and we're not going through everything with a fine-tooth comb. And even if we did go through it with a fine-tooth comb, we might not even know what we're looking for. That was the same case with WorldCom. Both of these companies were massive in the tens of billions of dollars valuation, and they are now gone. And actually, their executives are gone as well. The CEO of Enron, who his name was Kenneth Lay, he walked away with $500 million, and that money was going to be taken away in a lawsuit, right? I think it was 3 weeks before, 3 months before his death. He was on vacation, or 3 months before he was supposed to be sentenced. He was on vacation, had a heart attack. And when that happens, the court will vacate the judgment, meaning he didn't have to lose that money, so his wife got a nice payday. Makes you wonder out there. Conspiracy theories abound. With WorldCom, you have Bernie Ebbers, and he's still currently serving a prison sentence for his part of that scandal. But these are the hardest ones to find because you usually find out at the end. And these two companies really fooled the world. Now, there's other ones out there that are a little bit easier. And this is kind of a deceptive trick that some companies will do. So say, for example, Coca-Cola, one of the more popular, prestigious brands in the world. There has been a case in the past where a company went in and just changed the name to something like Cola, and then issued securities and were cold calling people trying to get them to buy that, making the buyers believe they were buying Coca-Cola, where instead they just bought a shell company that was worth absolutely nothing. So got to make sure that you know what you're buying. Anytime someone is trying to pitch something to you or sell you a security, make sure that you look at it and you really understand exactly what you're buying, and don't get fooled and fall victim to great salesmanship. Speaking of salesmanship, let's talk about one of my favorites, cold callers. I think I received about 2 today. And I always have to go through a process. For me, it's actually gotten much simpler, but for you, I'll walk you through a couple scenarios here. When someone cold calls you, I want you to ask yourself, why are they calling you? Right? Are you that good of a friend? Are you the best client for that financial firm? Do you even know who this person is? If it's someone out of the blue, why are you even entertaining the phone call? Second part of this is, what are they selling? Right? They're going to be trying to pitch you some product. Maybe it's a vacuum cleaner, maybe it's a security, maybe it's a timeshare. Why are they selling it? If this was such a good product or service, they wouldn't need to call you. If this was something that was going to get them 20% rate of return, they wouldn't be calling you. They'd be keeping it for themselves. Bottom line is, you are the last stop. You are the ultimate receptacle for the garbage that exists in the financial markets. And I'm putting myself in that same category. I get calls all the time from people trying to sell me some junk. Now, I've walked through the process of an initial public offering on Power Trading Radio before, but let me do it for this audience because you might be different. An initial public offering is where a company brings their shares to market. They actually become a public company, are now under the regulation of the SEC and other regulators out there, but we can now buy shares of their company on the New York Stock Exchange or NASDAQ or whichever exchange they're listed on. That process works like this. A company, and let's call it Merlin.com, and my company sells these remote clickers here. So I'm selling this remote clicker. I need more capital, so I need to go public. I want to bring my company public so I can sell the shares, raise money so I can make this a worldwide product. I can't do that on my own, so what I need to do is hire an underwriter. So I'll go out, I hire a firm like a Goldman Sachs, a JP Morgan, some company out there that will bring my company public. What they do is they will negotiate a deal. Of course, I'm going to give up a lot of money for this, but they will take my company, buy those shares from me, and then it's their responsibility to bring that to market. I've already agreed upon a price, so I'm getting paid. I got my number as the company. Now that financial firm, let's say it's Goldman Sachs. Goldman Sachs will go out there, and if he says, hey, this remote clicker company is amazing, it's a slam dunk, they don't need to sell any shares to anybody. They'll keep it for themselves. Of course, that's really risky, right? They want to offset some of that risk. So what they will do is they will go and they will call their peers. These are their buddies, the ones they want to bring into a good deal, maybe give them a cut of the action. Why? Because it's a scratch my back, I'll scratch yours type of thing. But they're going to go to the big dogs first. So I will call my JP Morgans, my Bank of America, my Wells Fargo, and be able to negotiate to sell, let's say, 20% of this IPO to these specific firms. If those firms now have 20% of this IPO and they feel it's going to really soar, they're going to keep it. But if not, they'll go to their really rich clients, the ones that have massive amounts in their banks as a token of appreciation. Say, hey, you know what? We think this one's going to do pretty good. Here's some of it. Bottom line is, I'll cut to the chase. It trickles down till to the very end. It's calling people like you and me who've got maybe $5,000 in the bank. Like, hey, Mr. Rothfeld, hi, this is Gene with Bank of America. We see you've got an account here with a little bit of money. Would you like buying some of this stock? We think it's going to soar 20, 30% in the next few months. Really? If it was, why the heck are you calling me? Bottom line is, it would only reach you if they had no other resort. So if somebody calls you, cold calls you, it's a real simple thing. You can entertain them as long as you want. If you want to torture them in a conversation, that's fine. But don't be tortured. The simple thing to do is to hang up. Just hang up the phone. I'm sorry for anybody out here in the audience who is in the teleservices or telemarketing industry, but let's be honest. If we wanted to buy a product or service, we could probably go out and find it on our own. And if someone's selling you a share of a company, you can go out there and do it on your own. You don't need to be pressured into it. All right. Let's talk about my next favorite one, which is the pump and dump. This is an industry standard, a staple of business around the world. Some areas it's illegal. Actually, some areas it's not. I was actually very privy to a situation which is a little bit different than what we're going to talk about here, but I was on a trading floor back in the late 90s and had these long rows of computers, and I sat right here. And right across from me was a gentleman, I'll leave his name out to protect the innocent, we'll just call him Eric the Red. And Eric the Red, every day during the trading session, and he's 6'4", I don't know, 250, 260, kind of a big guy. He would jump up on his desk, and I remember I'm sitting here and across from me, this giant guy jumps up and he raises his arms in the air and he starts screaming, "Xilinx! Crunching!" And there's 180 people on this trading floor, all were just like looking at Eric. And the whole point of this was he had already bought Xilinx, XLNX was the ticker symbol. He did it almost every day. And basically he was trying to draw your attention to a little move up. So we would all look, and people would go, "Oh, wow, it's moving." And they would buy 1,000 shares, 2,000 shares of this. So what happened is it ended up pushing price up, and Eric would sit down, and he'd hit the sell button and unload his shares. Pump and dump. Was that legal? I don't know. Probably not. I don't know if he really did anything that was outside of SEC code, but I can tell you this stuff goes on every single day. So let me show you how this is done and how you can do it if you want. Just be careful because you're probably going to go to jail if you get caught. There's actually a gentleman out there named Tokyo Joe who I think he settled with the SEC for like $500,000, but he made millions doing this. So here's the pump and dump process. What I'm going to do is I'm going to illustrate at the bottom by drawing a chart on the screen for you, and I'll walk it through various steps. So the first step is here to find an illiquid, cheap penny stock. Find something that's trading at a fraction of a penny if you can. Look, you can see at the bottom, price is just going sideways. There's nothing exciting about this chart. It's probably got no volume, which means you can go out there and start buying shares on the open market, meaning go to your exchanges and just buy 50,000 shares at a time. Keep in mind it's trading at 0.001 pennies, so it's going to be easy for you to gather millions of these shares up. So what you do is you keep buying and buying and buying. You're slowly driving price up because you are consistently buying every day, and you're going to buy as much as you can. Now, once you've bought as much as you can, now you email, tweet, Instagram, everybody you can. You issue statements on how amazing this company is and how it's going to soar to the moon. You get everybody involved that you possibly can. You create a frenzy. Hey, if you got some Hollywood celebrity fans out there, you get them on board too and use their Twitter accounts with millions of followers. What happens? Prices spike. And you can see, you've seen this many, many times, folks. Here you have a huge spike up, and as that thing is spiking, the original person who was driving this up is unloading their shares. And what ends up happening is that price will come right back down to where it was, and this stock will continue doing what it was doing, which is absolutely nothing. So you've taken an illiquid situation, artificially modified price, convinced those people that P.T. Barnum's sucker that's born every minute, convince them to buy it, and they're the ones left holding the bag. Happens every single day in the financial markets. If you don't believe me, do your due diligence, but go out there and just type in penny stocks or pump and dump stocks. There are websites that's all they do. You can be a member of their subscription service where they'll tell you which stocks to pump and dump. Just be careful because it is illegal to be doing that, and front running of order flow as well is illegal. So that is a major market scam out there, one of the more common ones you'll see on a regular basis. Oh, now this strapping lad here, this is a great one. This gentleman goes by a very lengthy name. Carlo Pietro Giovanni Guglielmo Tabaldo Ponzi. You know him as Charles Ponzi. Makes it much easier. 1882 to 1949, this individual was very well known on the East Coast as a swindler. In the 1920s, he started this stamp thing where he was basically jacking up the prices of stamps, and he convinced everybody for some very interesting numbers out there. And this is where the Ponzi scheme started, actually became famous. It was actually going on before this, but he's the one that really brought it to fame, hence the name. So what did he do? Basically, it was a multi-level investment scheme. Now, many of you have probably seen some of these out there. I'll run through a couple here shortly. But what he was doing was he was promising guaranteed rates of return. He was guaranteeing 50% rates of return in 45 days and 100% in 90 days. Now, I'm pretty sure that everybody watching right now, if you had a guarantee of 50% rate of return in 45 days, you would put every penny you had in there. I know I would. I would not do the 100% in 90 days, though. To me, that's just bad math because, let's be honest, if I was going to make 50% rate of return in 45 days, I would take my initial capital plus the return that I got, and then I'd reinvest it for another 45 days. See, Ponzi didn't do well there. He could have done like 120% rate of return in 90 days. Would have been better. Bottom line is he created an amazing system that has riveted the world. And if you look at what Bernie Madoff did, and what Bernie Madoff is still currently serving time in prison for, and he will end up finishing his life in prison, is for a Ponzi scheme. And how it works is like this. It's really saying that the top of that pyramid is the one who's getting paid. This would have been Bernie Madoff. And what you do is you bring in new investors, and you promise them outlandish rates of return. And I think Bernie Madoff was doing something like 10 or 15% guaranteed rates of return. But in Ponzi, you're doing 50% rate of return. How do you pay that? Because new investors come in. So that second level of investor, well, they're getting paid by investors number 2 and investor number 3 and so on. So the more people you bring into this, the better it looks. At a certain point, though, you run out of people to help pay the people above you. And that's when pyramid schemes and all pyramid schemes come to an end. It's great if you're in the top 1 or 2 tiers, but if you get down near the end of it, it's not going to work. One of the more recent ones, actually this just happened, they blew the lid off this one a few months ago, is called BitConnect, which was a Bitcoin type of Ponzi scheme. I would encourage you to check that one. It's actually rather theatrical and entertaining, but they were guaranteeing, I believe it was 40% rates of return per month. Pretty phenomenal out there. So bottom line is this, if someone's going to guarantee you a rate of return, promise you a guaranteed rate of return, it's probably false. Now, that said, there are investments out there that do guarantee you rates of return, like an annuity. But what is an annuity going to guarantee you? Well, they're going to guarantee you something like 5%. Why is that okay? Because remember, the historical average of the markets is 10%. So you're really giving up 5%, but you're getting guaranteed. That is okay. But if someone's guaranteeing you 15, 20, 30%, come on, let's be logical. That is unrealistic. All right. Let's go look at a trade, a system. Now, of course, I'm being theatrical here. I'm pulling my inner P.T. Barnum. But I have a system for you. You better act today, though. Let's talk about my trading system. And I'm going to show you some trading results. And I'm hoping that you guys all want to buy on board with this because it is an amazing system. I started with $15,000. And at the end of that period of time, I had an account of $109,000, which means I had a total gain of $94,250 in about a year and a quarter. I think people would be okay with that. And here's the real kicker. I only made 7 trades. That means I have a winning percentage of 71%. How many of you want to give me some money right now and buy into that system? Turn 15 grand into 109. I think you're all going, that sounds good. Maybe you're a little bit skeptical. It's okay. I understand. Be skeptical. Let me show you the trade sheets. Here you have a snapshot. It's kind of hard to read out there. I know. Maybe I will zoom in later. But what I'm looking at here is a results of all of those 7 trades that I told you. And you can see at the top here, we'll even highlight it for you just so you really see where the numbers are. Total net profit, $94,000 in gains. I also had, you can see total number of trades down there, 7 trades. I had 5 winners, 2 losses, which gives me a 71% win ratio. My net profit as a percent of my largest loss, 882%, folks. This is the real deal. You get rich with my strategy. Oh, what, you still not buying it? I will even show you the trades. Here are the trades that I made. You can see all 7 of them. This is on NVIDIA, right? And if you use my system, you're gonna get rich. I'm showing you the trades, I'm showing you the results, I'm showing you the setups. How do you not believe me? This is real deal. Send me the check today. This is a common one out there in the marketplace. Ask yourself a couple simple questions. Are these trades real? Of course, if I'm the one selling you this strategy, yes, they're real. Absolutely, they're real as the sunlight of the day. Well, are they audited results? Well, what do you mean by audited? Has somebody verified these other than the person selling it to you? And be very skeptical of who's auditing them as well. If their brother Bob is auditing, it's probably going to be fake. Are they verified account statements? Are they coming directly from the trading firm? Remember, we are in an age of Photoshop. Now, these are trades that could have been made. That is very true. But what this is, what I just showed you, is something that you can all do in a period of 5 minutes. TradeStation, one of the top trading platforms out there, has a functionality where you can actually apply strategies. So all I did in this illustration here is I went out, I applied a Bollinger Band strategy. And I said anytime it breaks down below its lower Bollinger Band, you're going to buy it. And then once it comes back in, if it crosses, I think we had some trailing stop number. I forgot what factors I used. But I just said use a trailing stop. And if it crosses trailing stop, get out. That gave us these results. Did I make those trades? No. Were they actual real executions? No. Did those orders go to the market or any form of market maker? No. Those are all paper trades. They're hypothetical, theatrical numbers that look great. And years ago, I was doing a workshop in Dallas, Texas. And there was a gentleman that came to one of the workshops, and I was listening to his conversation. He's trying to tell people this exact same thing. He was using Forex, though. So he was trading the currency markets, but he was telling people how he turned $10,000 into $1 million in a year. Really? Show me the real results. Show me your account balance and your statements and audited statements. Because anybody can go out there, run a simple strategy tester on the market, and tweak the numbers till it shows the most amazing results, but they didn't do anything. There was no emotion, there was no skin in the game, no real money, no real executions, no nothing. It's all paper. So be careful. This is a very common one out there. Anytime someone's trying to sell you a system and tell you how great their results are, you see it all the time. There's another one out there. It's on the web. It was 99% win ratio, meaning out of 100 trades, they only lose once. I call shenanigans on that one. No, not happening. Here's how it happens. They'll make trades, and what they do is they never close out a losing trade. So if you never close out a losing trade, it can't count against you as a loss. It's only the trades that they close. So what they'll do is they'll make trades, close it out as a winner, close it out as a winner, even if it's a small one, and now they can brag that they have a 99% win ratio. Whereas if you looked at their balance sheets and what's on their books, they probably have tons and tons of open losers that they're just praying will come back. So be careful about statistics that people post out there on the web. All right, here's another great example. This is something I saw at trade shows in Las Vegas. It is still a software company out there. This is a trading software company. And I went to their stage presentation, and they were promising 20% rates of return per month. And I went, well, hold on a second. I'm a numbers guy. 20% rates of return per month? So I went up to my room, and I just ran some simple spreadsheets, and I said, okay, what if I put $20,000 into an account on January 1st and 20% rate of return per month? How would that look? At the end of 1 year, my account would have gone from $20,000 to almost $180,000. Now that is an amazing year. Have I seen this in my career? Absolutely, I've seen this. I've done it myself, where I've had monster years like this. The key is consistently every year. And it wasn't that I got 20% rate of return per month. I had a couple trades that were just like through a 300% gainers, and there you go. So this part is not getting that far-fetched. But when we stretch it out into, let's say, 3 years, okay, here is 3 years at 20% rates of return per month, starting with $20,000, your account is now at $14 million. I'm going to leave that just hanging in the air there for a second. $14 million? Okay, that's getting a little bit far-fetched. Let's go out to 5 years. And by the way, this individual, as he had a circle of people around him, was telling these people that he's had clients that have been using the system for 5 years, getting 20% rates of return per month. I called BS on that one. Because if you kept a $20,000 account to start, 20% rate of return per month for 5 years, your account would be $1.1 billion. To which I actually responded to the gentleman. I said, listen, I don't believe you. If you're going to guarantee me 20% rates of return per month, then I will give you $100,000 today. I'll give you $1 million today if you guarantee me 20% rates of return per month. And he's like, whoa, and he just hemmed and hawed, and clearly I ruined his day and put him on the spot unfairly, but honestly, he was lying to these people, flat out lying. And here's something I found out that was rather interesting. This is a trading software company. It's not an investment firm. It's simply a trading software, which falls out of the purvey of the SEC. So he can actually make these claims without being under SEC scrutiny. I found that to be very, very interesting. So anytime someone gives you these outlandish claims, look, nothing out there is going to get you 20% rate of return per month. Nothing is going to get it for you. Other than hard work and you doing great trading, it has to be phenomenal. You have to take too much risk, honestly, to get 20% rate of return per month. And if it was available, you wouldn't find it on the open market. Trust me, if a Goldman Sachs had a system that guaranteed them 20% rate of returns per month, it would be in a tight little box, and no one would ever see this thing except the people that designed it and modify it, period. All right, let's go to the next one. Let's talk about some red flags. So you always hear about red flags in the industry. The key is these things exist because there's problems, right? You do not want to ignore red flags. So here's one of the first and simplest ones, pressure to act now. Now look, sales processes always have a pressure element to them. What I mean by the pressure to act now is that fear of missing out, that if you don't buy today, you're going to miss out on millions and millions of dollars. That type of sales tactic should be kind of frowned upon. I remember years and years ago, people were trying to pressure me into buying into certain things, and I just went back, said, no, thank you. You'll be there tomorrow or next week. So I need to go home and do my due diligence. Go home, do your due diligence. It will be there tomorrow. That special deal that they're going to give you today only, but if you only call today, trust me, you call them back a week later, a month later, that deal will still be there. Tell them you want that deal you're not buying, they'll give it to you, and they might even have a better deal for you. So don't be pressured to act now. Do your due diligence. You have to go research these companies. Number 2 is unregistered brokers. Yes, there are a lot of people out there that claim to be giving you financial advice. And remember, if somebody's giving you financial advice, they do need to be registered. So if they're not registered, they don't know the rules, they don't know the laws, they're falling outside of those laws, and they actually could get into criminal trouble for being unregistered and giving financial advice. I'll show you in just a second how we can actually scan and find unregistered brokers. All right. Guaranteed rates of return is another one. I mentioned that one just a minute ago, but guaranteed rates of return can be, to me, the kiss of death out there. That's what BitConnect was doing. That's what Bernie Madoff was doing. A lot of firms out there offering rates of return that are just unrealistic, right? If anybody's giving you more than 10% annually guaranteed, you should raise a red flag automatically and say, hold on a second, let me research what you're doing, how you're doing it, but don't sign anything right there. Make sure you do some due diligence because it's probably a scam. All right, so what can we do? First part here is perform due diligence. You want to protect yourself. So step number 1, go out there and perform due diligence. If you go to this link here, which is, I was going to copy and paste it, but unfortunately I didn't get a chance to do that today. I was actually going to take you out to one of these as well. If you go to the sec.gov, there's a thing called EDGAR. EDGAR is the business database. At EDGAR, go out there. If you find any firm that's trying to sell you something, what's the company? Look at them. Who are they? How long they've been around? It'll tell you all of the different things going on with that specific company. And I would encourage you to do that because watching where the money is coming from and where the money is going usually tell you where the problems are. So find out how long that business has been around. Who are the key players? It'll tell you who are the CEO, CFO. You can even do some research on those guys. Criminals tend to stay criminals, and they tend to flock together. Not necessarily that they're criminals, but people who have a shady background, let's put it that way. And you can find that on the EDGAR database. And if a company doesn't have any filings on EDGAR, it's probably fake. If a company has 1 or 2, it's probably relatively new and doesn't have much history. If it's been around for 10, 15 years, okay, that might be a little bit more valid. Also be sure to check on how this company has changed. For example, one of the classic pump and dump stories was a company that was a technology firm that had this new technology. It was supposed to be the latest, greatest thing, and they were convincing people to buy in. So a lot of people bought in, and all of a sudden, it was bought by a travel company. Wait a minute. You've got this technology, this software that's for telecommunications, and now you're a travel company? Did you really have what you told me you had? So if they're flipping the identity, what the business does, that's also a red flag out there. Next step is to look at broker check. All right, so this is a fun one. I'm going to see if I can actually real quickly bring a piece up here for you. But broker check is a way for you to look at who the brokers are, their background, and what has happened with regards to the SEC and FINRA. So FINRA has this great site. I'm actually going to bring it over the top of the screen here just to real quickly show you this one because it's kind of entertaining. So let's show you how this one works. Come on, there we go. So I'll zoom in here and we'll just do broker check. And I'm going to go into, let's see, you guys might remember a couple different participants in the marketplace, but let's just type in, I'll do 2 for you. I'm going to throw myself on the block here and we'll type in Rothfeld. Oh boy. Don't worry guys, I'm not a registered securities advisor, but I wanted to bring this up because you can see that here's David J. Rothfeld and he's at HD Invest Services. We can go there and see all the different pieces about him. This guy's been in business for 29 years. What I wanted to show you is if you get a call from a guy named Craig Adam Rothfeld trying to sell you anything, he is barred. This individual is barred from the securities industry, and you can go here and actually click on this page and it will tell you all the disclosures. So here you can see he had a customer dispute. So apparently he wasn't so loved by his customers. He also had a regulatory piece here in 2012 which caused him to be banned. It will give you all of the different rules and regulations out there, all the different things. It'll even tell you their security licenses that they hold and the history of them. The other one that I thought was actually rather funny was if you go and type in SIDEN, there's a gentleman out there Was it right? Yeah. There's Mark. Okay, so here's Mark David Seiden. And I was like, okay, let's check this out. This is previously registered as a broker. So let's say this guy's trying to sell me something and I want to check this out. I'm going to go through and just go look here and see, oh, where did this guy work? He worked at Stratton Oakmont. Doesn't that name ring a bell, people? Stratton Oakmont is the movie that The Wolf of Wall Street was based on. It's a cold calling center. These guys were hard sales tactics people. So if I would look here, I could do a little research and see if this guy's calling me trying to sell me something, he has a history of doing it. Probably somebody I don't want to do business with. So go back to brokercheck.finra.org. I'll get you that address again. You guys can see it right here. This is the quick and easy way for you to go and check the different brokers that you might be working with. And it's key to do that. As I say out there, trust no one. All right, our last piece here is just understand what you're buying into, whether it's a new technology, whether it's a company, whether you're investing in a cryptocurrency thing, whatever it is, make sure that you understand what you are buying into. And what I encourage you to do is if you're buying into something and the person that runs that company is selling you on it, that's great. Go out and do your own research away from that person, because if it's my company, I'm not going to say anything bad about it, right? My clicker company is amazing. It's the greatest thing in the world. We're going to take over everything and have bigger GDP than China. I'm going to tell you what you want to hear because I want your money. Go away from those people and find out from different industry experts, is this a valid technology? Is this a valid company? Check a lot of user groups. And again, when you're looking at user groups online, always be sure to take it with a grain of salt. Because no matter who you look at, you could probably Google my name out there, and I guarantee you there's somebody that thinks I'm the worst person on the face of the earth because they just don't like me. Maybe it's because my last name is Rothfeld. Who knows? But you'll always get bad comments, and you're going to get great comments. Look for the middle ground and see what most people are saying about it as far as a technology or a company that you want to invest in. So the final piece here is, look, if it's too good to be true, it probably is, especially in the financial world. So everybody knows that that the consumer, you, me, and everybody else watching this, we all want to get great rates of return. We all want 100% rate of return per day. Give it to me. What do I got to do to make 1,000% a month? Be realistic. It's not going to happen. What is realistic? Getting about 10% a year. Getting guaranteed anything higher than that? Red flag. So if it's too good to be true, it probably is. Yes, you're going to see headlines every day about people who got rich doing crazy things. Did they get rich just from that crazy thing, or was it some other combination? Who knows? But they're going to sensationalize something to get you to buy it. So be careful out there. This industry is fraught with scams. There are tons of them out there. Not to say that the financial markets are all scams. There are a ton of great opportunities out there. One of the things we focus on at Online Trading Academy is how we can trade for a living and achieve our financial goals, not with the get-rich-quick scam type of thing, but actually trading for a living. The mechanics and the business of it, doing it as a structured process day in and day out. That's how we achieve our wealth. Scams, they're going to get you rich overnight, but they're probably going to take your money in the process. If you guys would like to learn more, we have more videos and education at otacademy.com. We've got classes on just about everything out there. There's a lot of the products we talked about. I actually mentioned some about annuities today. We actually have some great videos on annuities, which will help you understand guaranteed rates of return. Hope you guys got a lot of great information out there. Be safe, protect yourselves. We'll see you next time.